How's everybody doing today? Hope you had a great weekend. Homebuyers are on strike. Did you hear the news? And despite sellers slashing home prices, it's a crazy thing going on. This coming to the end of the spring selling season, spring market that never happened. The spring market that didn't exist, and yet these buyers are just sitting. So that's what we're going to talk about today. And I came across a couple articles that this week that I kind of want to dig into and talk about and whatnot. So that I thought it's not so much new news or super interesting per se, but it is what it is. And I think that the housing market at large was hoping for a typical spring market. Spring market's typically where we the market sees the most amount of activity. That's when prices go up the most. That's when we see the most number of buyers that come to the table. And, for the most part, about 40, 50%, 60% of the homes sold in a year happen within a very short period of time during that spring market. And this spring market, not so much. Not so much. This market was non-existent. And partly because of the interest rates, partly because of home affordability, which is ridiculous. Home prices through the roof. But a lot of buyers are sitting on the sidelines. And quite honestly, I myself was expecting some of those home buyers to push forward because they were kind of sitting on the sidelines all during the fall after the interest rates went through the roof. And they didn't, and it's an interesting thing in the real estate world where, usually the reasons why that people want to buy a house is either they have to because it's a forced move for some reason or something, something pushing them, or they want to make the move. They want to improve their life circumstances, they're outgrowing their house and so on and so forth. But that just didn't happen. So hence the reason the home buyers are on strike. So we're going to dig into that today. I've got a couple articles here for you that I want to share. Those logging in, feel free to jump in the chat, say hi, let me know where you're watching from and so forth. And drop any questions in the chat. We'll get a conversation going. I also kind of want to dig into a couple of charts I found as far as where the prices are rebounding year over year or now versus the pre-pandemic 2019, which I thought was super interesting. And then we're going to there was an article actually that was dropped just yesterday, about, what's next, what's going to happen in the near future. So we're going to dig into all that. And then we'll see what questions we get and conversations we can have and dive into this wonderful world of real estate, as it may be, as frustrating as it may be for a lot of people these days. Craziness. So the first article that I want to bring up that I came across has to do with the Homebuyers Revolt. So let's see here, get this a little bit bigger for you. And so basically this article kind of goes into, this was homebuyers starting to revolt over steep prices across the U.S. It was a Bloomberg article. It says the U.S. housing market, long crippled by inventory drought, is finally starting to see listings rise, depending on where you are in the country. It's not everywhere. But now, in most places, the buyers just aren't showing up. That, again, depending on where you are, that's definitely a locale situation. Sellers are grappling with the fact that higher for longer rates are choking off demand during what's typically the key season for the market. And more of those owners are cutting asking prices than any other time since November 2022 as inventory grows stale, according to Redfin. We're seeing this a lot in a lot of the southern I have a chart actually that'll show that, and I'm going to show you in a second, but it depends on where you are. A lot of the southern states where they have an abundance of new construction, rehab construction down like in the Florida area, Texas, Austin, struggling right now. There are other pockets in the U.S., that are seeing this. Then there are areas that are isolated. Up where I'm at in the Northeast, we're not seeing that as much. We're not seeing a total huge increase in inventory, but we are seeing super high demand because our inventory levels are still extremely low. It says with mortgage rates rising back over 7%, the willingness of home buyers to take a stab this season is diminished. Ralph McLaughlin, senior economist at Realtor.com. You can have high prices and you can have high mortgage rates, but you can't have both for long. And that's the truth. I mean, the reality of it is it's just an affordability issue, period. Affordability issue. And if you don't have income you don't have income coming in to offset those numbers, those affordability numbers, the cost of housing, affordability goes in the toilet. So coming into this year, the prospects of rate cuts by the Federal Reserve stirred some optimism for a housing market that had just emerged from the worst year for sales of previously owned homes in nearly 3 decades. But the economy continued to roar on, diminishing hopes for interest rate cuts anytime soon. That was absolutely the truth. I mean, I would say that it was very much conversation that we had about having that the general feeling was that the Federal Reserve was going to cut rates. We were hoping that they would cut rates to kind of give the housing market the kick in the pants that it needed to get going. But it just never happened because of inflation. Inflation was still out of control, still roaring, and everything being interconnected, the Fed took a step back, and they did again in last week. And the hope is that they'll do something in the fall. We will see. It says without the rate cuts, a cold reality is settling down on the housing market. Robert Frick, corporate economist for Navy Federal Credit Union. Buyers are getting very little, if any, relief from the high borrowing costs. The average rate on a 30-year fixed mortgage hovering near 7% near the middle of April, and prices have continued to climb higher. And I mean, how high can they go? Seriously. In the 4 weeks that ended May 26th, the median sale price was up 4.3% from a year earlier to a record $390,613, according to Redfin. House hunters of all kinds are being squeezed out of the market. Sales of new homes, a bright spot for the inventory-constrained market, fell in April. Contracts to purchase existing homes that month slumped to the lowest level in 4 years. The pullback is caused by listings to accumulate rather than the pullback is causing. See if I can read. Come on, Jen. The pullback is causing listings to accumulate rather than getting matched with buyers, according to Realtor.com's McLaughlin. We're going to talk about some, new construction and kind of how that's it's so pivotal in this market, and it's just universally it's not there yet. Goes on, Lawrence Yoon, who's the chief economist of the National Association of Realtors, that it's been a disappointment, so on and so forth. It goes on to say that while sales are falling on average, in the U.S., the geography matters. Like I mentioned a few minutes ago, it definitely does matter where you are in the country, because of the fact what's going on in this country is it's a tale of two markets. And I'm hearing this more and more talked about, the fact that we don't have a housing market, we have two housing markets. We have the market that is the struggling market where inventory is back to pre-pandemic levels, which they're seeing in Austin. There's an article released just over the weekend that said that the inventory levels in Austin were officially back at 2019 levels. We have Florida, who is, certain, especially the southwest regions of Florida, are seeing the same thing. And when you have more inventory, you satisfy the demand, so the demand diminishes, and now you're seeing longer on market times, and you're starting to see prices adjust accordingly because buyers are not competing for the same listing. You have that market, but then you have the Northeast, and you have several pockets throughout the country that are not feeling that pinch, that they're not feeling that same wave. Our inventory has gone up marginally at best. Marginally at best. A for sale sign goes up, a pending sign goes in right afterwards. Multiple offers. Now, that being said, multiple offers, when I say multiple offers, it's not like it was during 2020, 2021, where it was, you put it on, you get 20, 25 offers. You may only get 2 or 3 or 4 or 5 offers, but it's still going under contract within less than a week. And New Jersey, my friend Jackie Baker down there, she talks about this all the time, and New Jersey's a hot pocket right now for appreciation, and they're just off the charts. So geography 100% matters, and if any report is generalizing about any kind of overall crash, or anyone talks about it, they're speaking out the side of their mouth, because it's not true. It really is 2 different markets. This article goes on to say that the Sunbelt markets, including Florida and Texas, which boomed with the influx of new arrivals during the pandemic, which is true. A lot of people fled California, for example, and went over to Texas. Primarily, California is one of the most expensive states in the country, and people were tired of all the nuances, the bureaucracy that exists in California, and they wanted to get the heck out, and they could get brand new construction for a fraction of the cost that it was costing in California. So I said, we're out of here. We're out of here. We're going to go get some land, get a little bit more space between me and my neighbors. We'll get a nicer house, the whole 9 yards. People flocked to Texas, and Texas responded with a ton of new construction. Well, now that things have cooled, the scenery's changing. The scenery's changing. A lot of people are moving out of Texas and leaving. And they definitely have their again, depending on the pockets. Austin is the area that seems to be the hardest hit right now anyways. Let's see. It says, which boomed in the influx of new arrivals during the pandemic, are now cooling, in part because people have been priced out, according to Redfin. Meanwhile, metros in the West, such as Seattle and the San Fran Bay Area, had sharper corrections in late 2022 and are already beginning to recover. That actually did happen. And actually, we heard about that in late 2022 and thought, oh gosh, this is the market that's correcting, that this is going to be the end of that 2021 craziness, with the prices shooting up 10, 15%, outrageous amounts. And that was a little taste of what was going to come. And then it just dissipated. It didn't happen. It didn't happen. It was very strange. It goes on to say some of the other areas that have struggled. I think that was it for this article, actually, that I wanted to mention, because this goes on to name some of the other areas that have been affected. Houston, contracts are down 14%. Houston, West Palm Beach, Florida, Atlanta, so on and so forth. So, it's very interesting to see what's happening in different parts of the country and whatnot. But I wanted to jump over to an article that talks about what the buyers, what's happening with the home buyers. And let's see here if I can get this. Bear with me here, folks. Here we go. All right, so this is when as the title says, home buyers are on strike. This is kind of one of the key elements that tells us that buyers aren't doing anything is the mortgage applications. And at one point in time, last year, even though the interest rates were going up, we saw mortgage applications go up. We saw that at the beginning of this year, the beginning of where the spring market should have started. We usually see like the end of February, things start to start to percolate. Buyers start getting pre-approved, they get ready, they're ready for those new listings to come on the market. And then, and that was what happening. It was the mortgage applications actually went up despite the interest rates. And that led a lot of us to believe that, because of that, buyers were going to just say, you know what, this is the new normal. This is the new normal. And yes, I have to put down, my down payment is going to be less impactful because the rates are a little higher and the prices are a little higher. So maybe I can't do 20% or 10% down. I've got to put a little bit less because to offset that rise in prices. But then they never pulled the trigger. They never pulled the trigger. And now things are settling down. As this article goes into saying, housing market continues to slow as mortgage applications decrease. Mortgage applications declined 5.2% for the week ending May 31st. I want to say, I think it's May 27th. I'll have to double check that. But it's like a the National Association of Realtors, I don't know, it's statistically like the highest number of contracts or homes sold on any given day, and they had done all the computations, and they said this is the busiest day of the year, and it was like the end of May. It was like May 27th. I want to say it was May 27th, something like that, and came and went. This should be the busiest right now. Like, it should be absolutely bonkers. Well, right now, heading into June, we're at June, what day is today? June 10th. It's starting to, typically, we start to see it winding down a bit, but May was, it should be cranking, and it just wasn't. And applications actually declined for the week ending May 31st, with adjustments accounting for Memorial Day holiday, signaling a continued cooling of the housing market. Amid a backdrop of high mortgage rates, which saw the typical 30-year fixed rate mortgage fixed rate rise to 7.07%, the market composite index, a measure of mortgage loan application volume, fell by 16% of an unadjusted basis from the previous week. Says the decrease in refinancing and home purchase applications points to a growing buyer hesitance during a traditionally active spring period for housing transactions. The trend noted by MBA, Mortgage Bankers Association, Chief Economist Mike Frantantoni, somebody's going to crucify me for saying this incorrectly. Oh well. Frantantoni reflects a broader hesitation in the market due to climbing interest rates and ongoing economic uncertainty. They go on to say that after adjusting for the Memorial Day holiday, both purchase and refinance application volumes were down, with purchase activity specifically 13% below last year's levels. 13% below last year's levels. That's a significant impact on the overall housing market. The thing that I look at though, and I've been doing this a long time. I've been doing this. I got into real estate. I got my real estate license, got into the business, been doing this, nothing but this full time for over 28 years. 1996 got my license. And the thing that is always true is that eventually people pull the trigger. We saw that when the market crashed. We saw that, you date back to, in the 80s when interest rates were up at 18%. Yes, the affordability, was, the affordability rate was entirely different back then. And we do have extenuating circumstances right now. However, where there's a will, there's a way. People will make sacrifices. If the need is there, if they want the move badly enough, or if they're relocating, or they need to be near family, or they need to be near a loved one or a parent that is sick, or whatever the plethora of reasons that people need to move, it's always going to be regardless of what the external circumstances are. The external circumstances will control how you achieve that. You want a 4-bedroom, 2.5 bath, but all you can afford is a 3-bedroom, 1 bath. And if it means being closer to family, you might be a little bit less comfortable, but you'll still do it. Maybe you just don't want it bad enough, but a lot of people will. And the market doesn't stop. So when I see data like this, I see pent-up demand. I see that there's always that cycle, especially with, I was looking at the data this morning about the millennials that started purchasing in 2015 and have come in, and the millennials account for, there's 75 million millennials of age coming in to buy homes. Compared to the baby boomers, there's 73 million. There's more millennials than there are boomers. And I actually I'm going to be dropping a video on this next week about the boomers and what if the boomers, once we get through all the boomer inventory, like what does the market look like? And I will tell you, spoiler alert, that it's not enough. It's not enough because there's such high demand. And then we've got the Gen Zs, which it was interesting for me to learn that the Gen Zs, and there was a chart that showed the home purchase or home ownership rate, and each generation outlined, and Gen Zs have a higher home ownership rate right now in their early 20s, mid 20s, than any other generation prior to. These guys, these younger buyers, are going to be pushing the market, and they're going to buy regardless of interest rates and all these different things. So when I see 13% below last year's levels, that just means people are pressing pause, but they're not going to buy, which means it's like anything else. Once the proverbial cork is unplugged, once the drain is unplugged, look out, because it will come as a tidal wave. People are going to be coming in droves to get into the housing market, and that could have some interesting effects. So let me know in the chat if you know what this mug is from. Those that know, you know. Anyhow, getting back to this, let's see, the segmented responses for the MBA's data uncovered and a few nuanced trends. This was also interesting, and I did a live stream a couple weeks ago about people looking at different ways to get into homes, creativity. And I think that necessity is the mother of invention, always. And so, whenever there's a need, that people get creative. And so this article says, in terms of loan types, there was also a shift in preference. Applications for adjustable rate mortgages, ARMs, which we haven't seen like to this degree, to be honest, since the great financial crisis. People were getting ARMs left and right to get their foot in the door and get those low rates, and then the market collapsed, not because of adjustable rate mortgages, but because of people making financial decisions recklessly. But applications for adjustable rate mortgages saw a relative increase comprising 6.7% of total mortgage activity, up from 6.5% the previous week. That shift might indicate some buyers are seeking lower initial rates amidst climbing long-term mortgage costs. On the other hand, the Federal Housing Administration, FHA loans, which first-time homebuyers typically favor due to lower down payment requirements, constituted 13.2% of all applications, up from 12.7% a week earlier. So this is what I'm talking about in terms of the trends with the millennials and the Gen Z, coming in coming in and as those first-time home buyers, making a dent on the market. It'll be interesting to see what happens with these, with these first-time home buyers. But, this right there tells me that if there's an increase in FHA loans, despite the fact that we're in a seriously, the least affordable housing market to date, hands down, and yet first-time homebuyers are figuring out how to get their foot in the door. So it's not easy. I have a kid that just graduated college, and I'm nervous for her. But in trying, how is she going to get her foot in the door? But she'll find a way. She's going to find a way, and this is proof that these first-time homebuyers are finding a way, because FHA loans are on the increase. Typically, if you're going to buy a house and you're, say, a repeat buyer, you're going to sell a house, buy another, you move up buyer or move down buyer, you're going to go with a conventional mortgage. You're going to go with, if you have more than 20% down because you're taking the equity from the previous house, rolling it into the next house, you're going to have more than 20%. You're not going to go to FHA. You're going to go to a conventional loan. So this tells me that the first-time home buyer activity is up, which is very, 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 very interesting. It also goes on to say that the VA loans, and another indicator of first-time homebuyer activity, rose modestly from 12.1% from 12%. That's a little itty bitty rise, reflecting a continued reliance on government-backed programs. And then it says government purchase volume was down less, helped by growth in the VA applications. The market is relying on first-time homebuyer demand, and many first-time buyers do use government lending programs, which is absolutely true. Regions with lower housing prices historically saw a smaller drop in application volumes, which is interesting, suggesting that affordability continues to drive market participation. And then on affordability, while the price per square foot of homes has risen 50% since 2019, let that sink in for a second. The price per square foot of homes has risen 50% since 2019. It's kind of gross, but nonetheless, the share of homes of affordable range, the share of homes in the affordable range of 200 to 350,000 has been increasing. So that is super enticing. I really want to know more about where those homes are being listed. Now, my initial reaction on something like that is that potentially, when you're talking about, first-time home buyer, now a source of first-time home buyer homes is definitely going to be baby boomers that own maybe the original house, the modest house that they bought 40 years ago. The ranch needs a ton of work, good condition, but completely outdated. And the price reflects that. And a home buyer, a millennial that is willing I say millennial, it could be any first-time home buyer that's willing to roll up their sleeves. And I'm a big proponent. I'm a big supporter of doing this. I'm a big supporter of on-the-job training. There's a plethora of information on YouTube. I can contest to that. I did not know how to do half the things I did when I bought my house 24 years ago. And the amount of things that I do now, 99% of it has all been I've learned from YouTube. And so, double check your research, all the things, of course. But the reality of it is that the turnkey approach, it's going to cost you more money. So to get past that, to buy something that needs some work, to roll up your sleeves, you get into these homes that are being sold by baby boomers that need updating. It's got the shag carpet. It's got cabinets that could be sanded and painted. It's got, maybe they had a cat. The house stinks and it needs carpets ripped up, the subflooring treated, and then all the trim needs to be replaced. These are not things that are detrimental to you moving into the house. You're not going to not get a loan because the trim needs to be replaced or the place stinks, but you will get a better price, get your foot in the door. There's a lot of opportunity for the first-time home buyers. And so I'm very encouraged when I see the share of homes in the affordable range of 200 to 350,000 increasing is very, very interesting to me, and also, extremely hopeful, that something might be, working around, coming around the corner. Anybody that's, if you're in the chat, if you're watching this live stream, you want to jump in the chat and tell me where you're watching from, that would be great. Love to know how far I'm reaching here. And let me know if you have any questions and you're watching this after the fact. Drop them in the comments. I look at those comments every day and be happy to, help you out in any way I possibly can. If, just a little segue, if you are starting your home search or you're starting the process with selling your home and you don't have an agent yet, please do not go on Google and look for an agent. You can fact check an agent, but try to get someone that can give you a referral. I am happy. I provide that service free to you. There's a link. There's a form in the description. You fill that out. I'll get in touch with you. I know a lot of agents. Been doing this a long time. I know a lot of agents all over the country. I know which ones are the good ones and which ones we're going to steer clear. So, if you need a recommendation, you need a strong referral for a good agent in your area, regardless of where you're located, check out the link in the description. And I'll reach out to you and connect you with somebody good. And then you can fact check, take that name and see how many, read their Zillow reviews and all the things and, see if they've got a channel on YouTube and, check them out. But don't just pick your cousin just because they got their real estate license yesterday and you want to help them out. That's not the way to do it. That's not the way to either sell a house or buy a house these days. You got to have good representation, especially with, there's going to be a lot of changes coming in August, with the way commission structures and representation works and in relation to the real estate industry. So you want to work with an agent that knows what the heck they're talking about and can guide you on that stuff. So I am going to, the next article I want to pull up talks about which areas of the country are kind of getting hit the hardest, in terms of the price depreciation or price adjustments and so forth. So housing market inventory in Texas is back above the pre-pandemic levels. I mentioned this earlier. These states could be next. Dum, 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 dum. There we go. I think I had one of those in there. It says, given the absence of an excessive amount of existing homes for sale on the market, it makes sense that spiked mortgage rates and strained affordability haven't resulted in more regional home price corrections. It goes on to talk about the different areas that have seen the corrections. It says we are starting to see national active listings rise. And this is from Fast Company. This was just a couple days ago. Up 35% between May 23 and May 24. However, we're still well below pre-pandemic, 33% below May 2019. So it kind of goes into, what those numbers are and, from a year over year and then from a pre-pandemic level. And so it says Texas is back above pre-pandemic inventory levels. And states like Florida, Arizona, Idaho are almost there too. We're observing some softening in the housing markets as higher mortgage rates temper the fervor of a market that was unsustainably hot during the pandemic housing boom. However, home prices in many area markets are still rising. So I actually have a interactive version of this that I want to pull up here, which is actually pretty darn cool. So let me see if we can get this nice and here we go. So depending on where you're at, okay, so I'm up in Massachusetts. So this is the 1 year, this is strictly May 23 to May 24, right? So now versus a year ago, where the inventory, and you'll see that the inventory has gone up with the exception of Nevada and, South Dakota. They're still kind of sitting with negative inventory, which is interesting. I'll have to research that to find out what exactly is going on in Nevada. And I know Las Vegas, there's a lot of talk about Las Vegas and what's happening over there. But, aside from that, it'd be interesting to see, my suspicion would be that people are and have been moving from California to Nevada to get away from California, just the bureaucracy and the taxes and a lot of things that are happening in California. People want out. And they're moving to the neighboring states. So a lot of people are just getting right over the border to Nevada. But, you look at the Northeast, down in Florida, 70%. That's crazy. So the listings are up 70% in Florida just over 1 year. Texas, 42%. 42%. And then Arizona, these are all the areas that I've mentioned before that are coming up in the news articles. The 68%, just over last year, an increase in overall inventory. Now, these states, Texas, and Florida, I did a video on this a couple weeks ago where, kind of talking about why that is. And there's a couple of reasons. Number one is the thing that I talk about in the video, which is that, Florida had one of the reasons, Hurricane Ian, and that just was devastating to so many different parts of Florida. And, that created a situation where the housing market was so ravished by devastation that builders came in and they just started, bulldozing and rebuilding. So there was like a serious influx of new construction because of that hurricane. That drove up the amount of inventory levels, and people started to see the opportunities and flock there and so forth. And people move from the Northeast, from my area down there all the time. Or they'll buy a property for 6 months out of the year and go back and forth. But then over in Texas, people were moving, I mentioned earlier, people were moving from California over to, Texas, to get out of the high prices of California, and they saw the opportunity over in Texas and what you can get for the money. So they had a serious new construction boom. The other thing to take into consideration, though, is that baby boomers. So when we look at the map and we look at where all the baby boomers are in the country and the most concentrated areas with the most number of baby boomer population, the majority of it is all in the southern states. So as those baby boomers are aging, and on the upper level of baby boomers are born 1946 to 1964. So on the upper level of the baby boomers, the older end of the baby boomers, they're going into nursing homes, they're passing away. That inventory is being introduced into the market. That's also a contributing factor. But you look at the upper areas in the Northeast, and it's just crazy. My friend, here we go. My friend Jackie Baker, 10.5%. Your inventory is up year over year. Absolutely bonkers. Connecticut 2.2. Connecticut's actually Hartford, Connecticut. My daughter went to college there, and that they're like one of the hot spots in terms of the fastest growing cities, and also great value the affordability index is very high at Hartford, Connecticut. Who knew? Massachusetts 17.1%. So it doesn't feel like it, but if you have a jump from 50 or 60 listings, and you add say 60 listings, and we jump up 10%, you're talking 6 listings, 20%, 12 listings. It's not a huge jump because the inventory is so low, but 17% is 17%. What is very interesting, though, is what's happening from, if we look at the numbers, though, from a year ago. I want to take a look at those. Not a year ago, 2019, which is crazy. Let's see if we can get this nice and, there we go. Get this all sized up here. Actually make it a little easier for you all to see if we can make this, there we go, a little bit bigger. So this is active housing inventory for sale. Now this is very interesting to compare the pre-pandemic levels versus now. Now, at pre-pandemic, 2019, the one thing that I will say is that 2019, we were in a heavy seller's market. The market was already ramping up at 2019. It didn't just go from 0 to 60 in 2020. We were already in a deficit. We were already, our inventory was already down as it, from a normal, say, balanced market to, more into a seller's market right out of the gate, 2017. And that largely, as I mentioned earlier, that largely is from those millennials that came in 2015, 2016, the millennials came of age and they started to buy, and that created more demand that started siphoning off that inventory. And without more inventory coming on to take its place, those inventory levels are going to drop. But just the change from 2019 till now, I mean, look at some of these numbers. This is bonkers. Like Rhode Island, 68.6%, Massachusetts, 55%. These are the numbers. I want to see, where's my friend? Connecticut, 77%. 77% is how much the inventory has dropped. New Jersey, 70%. All areas in the Northeast. Don't know why y'all are moving up here, why the demand's up here. I mean, the weather is nice, but I'd much rather be in the warmer states more often than not to get, to enjoy that year-round weather. My brother and sister-in-law live down in Austin, and every day it's sunny and warm and nice, dry, and all the things. And I'm still it's still kind of sweater weather up here in Massachusetts. But people, because of industry in colleges and doctors and hospitals and all the things, people are still driven up here. So 2% though, I mean, in terms of, this is where the numbers, where the rubber meets the road. When somebody says that Austin, Texas is back to pre-pandemic levels, here's the proof. Here are the numbers. The 2019 versus May 22. There's only 2% difference between then and now. Arizona's still down. Matter of fact, I think Texas is the only one at this time, but look at all these other states that are right nipping at right at their heels. Florida's almost there at 5%. Idaho is only down 1%, a little over 1%, from, they're almost at their pre-pandemic levels as well. So I'm going to have links to all this stuff in the description so you guys can check out your own areas and your own states and kind of, dive into that. And I'd be curious to see if this, matches Alaska, if anybody wants to move there. Hawaii, I thought that would be better, but they've got a plethora of issues down, over in Hawaii. But I'd be interested to see if this matches what people are seeing, in terms of what the reality of it is versus what the generalized, because of course this is all generalized. You look at the great state of Texas and it's 2%, but that's combining all of the areas into an average. And it doesn't speak to Austin versus Dallas versus Houston. There's going to be pockets, just like there's anywhere else. There's going to be pockets, some areas doing better than others. So it's all very interesting. And it's all it's just a constant moving target, and we'll see. I wanted to bring up. Because, we're always talking about inventory, and I wanted to revisit an article that I had pulled up while I was doing my research for this video I'm dropping next week about baby boomers and the impact on the boomers and what happens when the boomers finally are gone. We don't live forever, unfortunately, kind of morbid to think about, but it's a fact of the matter is that, eventually, that huge amount of stockpile of inventory won't exist anymore. And then, and then what happens after that? So I just wanted to bring this up in case anybody was interested in this information. And this was back in March, but I think it's still relative because of the reality of it. This is a long-term outlook. This is something that is not, nothing's changed between March and now in terms of, what the anticipation, what is anticipated to happen with the homes that the baby boomers are sitting on. And right now they're sitting on this 9 million homes. Supposedly. So it goes on to say that, there will be 9.2 million fewer baby boomer homeowner households by 2035. This is according to Freddie Mac. While economists at Freddie Mac estimate that the number of baby boomer homeowner households will decline from 32 million in 2022 to 23 million in 2035. They don't anticipate this picking up steam for a few more years. They say what some have called a silver tsunami will be more of a gradual reduction. That silver tsunami term has been played around with a lot, and a lot of the, let me pause this guy. This guy is just, I get this thing. Oh my goodness. There we go. Sorry. The sensationalist headlines, sensational news reporting will say that this is all coming at once, and it's not. It's not, because of the nature of baby boomers, living longer and being more active and not wanting to. They're aging in place. They're not going to be selling off their homes like their parents did, because, and a lot of them are actually gone back to work. They're doing part-time jobs to stay busy and help, and some of them to help afford living at this point. But this graph kind of illustrates, kind of says it all in terms of, what, how the progression will be. And these are all cumulative numbers, right? And obviously just estimations. But the important thing that I wanted to just, illustrate is the gradual curve of homes coming on the market. Boomers dying, boomers downsizing. Now, when they downsize and they buy another house, it's a 1-for-1. So it really doesn't help the market at all. But if they're moving out and say going into a nursing home, or they're moving out and going into moving in with adult children, or the children are adding on to do an in-law for the parents, or that type of thing. So, I mean, some of them I've talked to have decided to move out and just rent and travel. And I have a baby boomer friend of mine who traveled and lived on a cruise ship, Viking cruise trip, for 4 months. 4 months. Crazy. Saw like 22 or 23 cities. 22 or 23 countries over the summer. And that's what she did. She saw the world. And so instead of being, tied to a house, you have to maintenance and mow the lawn and all the things, some of these boomers are going to sell and go live in an apartment or something and travel, or get into an RV and travel. So it's going to be a gradual decrease of infusion of listings into the market. Here is the thing, though, and I mentioned this earlier, the number of millennials, and I keep bringing up millennials because of the fact that predominantly millennials are going to be first-time home buyers. Gen Z are going to be first-time home buyers. And when you have, say, my generation, Gen X, when I'm selling a property and I'm buying another, it's a neutral impact on the market. It doesn't affect the market at all. I'm giving, but I'm also taking from the market. I'm selling and buying. Neutral impact on the market. What we want are homes that are being sold, but the homeowners are not buying another house. That's a positive impact on the market. That's what new construction does. Positive impact on the market. So in order to satisfy, you have these incoming first-time home buyers that are not selling anything, and they're just taking from the market. We've got to be able to have an equal number of homes being infused to satisfy that demand. And as of right now, there are 73 million baby boomers and 75 million millennials. And you start thinking about those numbers, and even if all the baby boomers put all their houses on the market, it's never ever going to satisfy the demand of the millennials, never mind the incoming Gen Z. Excuse me. So the answer is not going to be the baby boomers. And I know there's a lot of strife. Who uses that word? Strife. But I thought it was a fun word to use. Anyhow, if there's a lot of like, conflict between, baby boomers and millennials. I'm going to get you, whippersnapper. No, you won't. I'm going to get you. All the things. And the reality of it is that's not the answer. That's not the answer. We need new homes we need new homes to be built. That is the answer. And, we have to create housing. We have to, the housing industry, government, needs to figure out a way, instead of giving these nonsense $10,000 credits, which don't do anything to help to really solve the problem, they need to do more to create housing to get to the root of the problem. Now, I've been watching for a long time 3D printed houses. You say 3D printed houses, like the thing you buy in the toy store for your kids that does like the plastic doohickeys. No, these are 3D machines that print houses with cement, and they're using them in third world countries to build homes, one-room homes, and they can build it in a matter of a couple days from nothing. And they set up the machine. The longest part of the process is setting up the machine. And they set the machine up. I might do a video on this, but we'll see. They set the machine up, and it has an extruder, just like a 3D printer would. And let's see if we can get out of this thing here. Bear with me here. There we go. It sets up. There we go. Sorry, technical difficulties. They set the machine up once they prep the site, right? And if you have a straight up slab, just straight up, slab foundation, no basement or anything of that nature. Once they actually input all of the technical data in terms of the blueprints on the exact specifications, on the dimensions and where the windows are going to go, and where the doors are going to go, and the size of the walls and the depth and all the things, and the divider walls, it sets it up, and literally it takes one, maybe two guys to man while the machine's doing its thing, and it goes by itself. And the extruder extrudes cement, and it just follows a pattern. And by the time it gets to the repeat pattern, the cement has cured enough so that it just stacks it on top of each other. It's fascinating. Once this is done, finished carpenters will come in. And there have been several houses in the country that have been built like this for just residential use. And in the States, in the U.S., finished carpenters would come in. They might put up a traditional, drywall or covering, or they might skim coat it or something like that, and then put wiring, plumbing, and whatnot. But it's a fraction of the cost compared to stick-built lumber, labor, time. It's amazing how quickly, and you're not, at this point, you're not building a 2,500 square foot home, but the needs of the new buyers are changing. The needs of this newer generation are changing, and the newer generation is looking for sustainability. They're looking for homes that are not going to cost them an arm and a leg, that they can actually live in, avoid paying rent, and afford. They can actually afford it. These energy efficient homes. So I feel like that potentially is an option. Another option is modular homes. And modular homes, everybody says modular homes. Oh, they think of like mobile homes back in the day, the mobile home parks and all the things. And that's not what modular homes are. Modular homes are basically a home that's built in a factory. No different than a stick-built home, except it's built in a factory. You build it if you have an extra wide, say a ranch, instead of having, they can only build it as wide as a flatbed truck. So if you had, depending on the dimensions of your home, you might have two of these sections put together, and they build it to the specifications, put it on the back of the truck comes, and then a monster crane picks it up. And I've watched it. A friend of mine had this done, actually purchased a modular home from a manufacturer in Pennsylvania, It's a lot of them in Pennsylvania. And it came up in sections. It had a Cape Cod style home. So it came in 3 sections because it had a dormer off the back, full dormer off the back. 3 sections. And they had finished carpenter come in and do the dormers, the front doghouse dormers, and tie it all together and all the things. But the thing is that on those modular homes, you're not in the weather. They're quality controlled. A lot of them are done by, machines. So you take human error out of the equation. They're built to withstand 70 mile an hour speeds on the highway. And the center, instead of having one center I-beam for support, there's 2. Because there's one on each section. So if you have 2 sections back to back, each one has an I-beam with support. You have 2, and that's when I walk into a house and I look in the basement and I see 2 I-beams, chances are it's a modular home. And that's not a bad thing, but it's a telltale sign, and they're extremely well-built homes. So I think there's a lot of opportunities there to increase the housing, and it's just a matter of getting to that point. Just getting to that point. I wanted to bring up, let's see here. I wanted to show you all. So if you guys have any questions that you want to message me directly, and just do a personal question as opposed to putting it in on the YouTube comments. You want to message me, send me a personal message. Feel free, go right to my website. Ask Jen a question, and then you can also click this link here. Refers to request an agent referral, and essentially. What I'll do is once I get your information, I'll give you a call, we'll have a conversation, and then, I'll find out what exactly your needs are, and then scout and do the homework for finding an agent that really fits your needs, depending on, what it is that you are, what it is that you need, because not every agent will cater to every circumstance. And so that's I kind of do some of that legwork for you. And then the other thing that I wanted to do a shameless plug on here is for my friend Jackie and I have a podcast. This is just a fun, a fun thing that we do that hopefully brings some positive information. It's the Reddit Real Estate Disaster Podcast. So we publish once a week. We have our YouTube channel here. You can check it out, or it's on every podcast platform. You can listen to us while you're at work. If you're you want a little bit of interesting storytelling and kind of sensational stories. Like it's just kind of just bonkers what people will do and what they'll write about. I just don't understand how people can, just air their dirty laundry. It's kind of, it's kind of funny actually. People air their dirty laundry. They talk about everything on these Reddit stories, and then we just have a conversation about it, and it is unfiltered and unedited. And for adults only, not for children by any means. So, feel free to check that out if you want, clean, if you're cleaning the house and you're looking for something to listen to, pass the time, or driving to work, or whatnot. So, I would say that, to kind of wrap things up here. I mean, the home buyers, I hope they come off strike soon. We hope that we get some movement in the market for everyone's sake, because the reality of it is when the housing market suffers, everyone suffers. Yes, real estate agents are not making as much money. Of course, I mean, I have to feed a family too, but it's not. It doesn't stop there. Every single contractor that you hire that you need to have plumbing work done, electrical work done, furnace work, roofing, siding, anything that relates to home, ownership. When the market stalls, their businesses also are impacted. The home improvement stores, the Lowe's, the Home Depots, the small mom and pop shops, they're impacted. The housing market is it is a mainstay in the economy, and for that reason, it's imperative that the housing market get going again, because it will have a ripple effect. It does have a ripple effect. Excuse me. It does have a ripple effect on a lot of businesses, and it will impact the economy as a whole, eventually. So it'll be interesting to see what will happen, come towards the end of the year, come towards the fall, if things don't change. But we shall see. We'll see what happens between now and the next live stream. So, hey, thanks for hanging in. Just a quick, I meant to mention this earlier, actually, the beginning. There will not be a live stream next week. There will not be a live stream on Monday. I'm going to be taking care of some personal business, so I'll be skipping next week, taking a week off, but I will be back on the following Monday. So, if anyone has any comments, any questions, or anything of that nature, feel free to drop them in the comment section. I'll get back to you. Other than that, thanks for joining. Thanks for sticking around. And, I appreciate you dialing in. Have a great week. Be kind. Be nice to your neighbor. Do something nice for someone. Take care. Be good. We'll see you next week. 2 weeks.